right, let's jump this on Twitter. Who shall be first? Paul's been fast on every stream, so I kind of wonder if he'll be the first one in here today. And there is Paul. Paul first as usual. My goodness, look at that. Look at that left side of the screen, all that green in there. Where did AMC actually start the day out? How's it going, Paul? So there's the start of the day. Wow. Wow, wow, wow. Hey, Cassie, welcome to the live stream. Oh my God, PROG. PROG, I love you so much right now. Just great run up on the day for PROG. You know, Clay was, we mentioned it several times on the stream, especially when we were down on PROG, down in the 125, 130, even down in the, I think 111 was the bottom it hit at one point. We kept mentioning to Clay about, averaging down. It's a perfect time to average down. And, I jumped in and ended up forexing my shares. And sure enough, we're getting this great run up right now. I was actually looking at some covered calls to capitalize a little bit, but I don't think PROG's done running. I think realistically we could see about a 250 a share, 250 share price. Maybe high 230s, low 240s, but definitely has a lot of room left to run. And let's pop over on crypto. So what's everyone up to today? Oh, Bitcoin's teetering. It's teetering right on that green mark. I saw it flash. Purple there, just a few times. PROG average at 133. Need more. Yeah, your average is definitely better than mine. When I forexed my position, I took it from $2.40 some cents, $2.60 some cents. I could go back and watch some of my videos from back in November, late November, early December, when I was still up at that higher range. But when we dropped down and I saw us hit $1.25. I got an order in as quick as I could. I'm getting it at $1.27 on those shares and average down to 161. So, yeah, as far as PROG goes, I am absolutely loving this. Like I comment on Clay's stream, I'm feeling like a bandit right now, just because snuck in, was able to average down, and here we go, not too far away. Making gains on all those positions. I think overall on PROG, I'm up like 20-25% right now. 440. What's at 440? Paul, is that Clay's average? Is it 440? No, I don't think PROG I've ever been at the $4 mark. I was at 2 something. I thought it was 246 or 264. I'll have to go back and look, but I don't think I was ever at $4 on PROG. In fact, well, hang on, I can look at my P&L on the day. It's like, oh, so glorious. Okay, let's go in. PROG. Where's my history? Those options. Call. Those are options. Wow. Did a lot on options there. Was I all? No, I thought I had, it may not go back. I had a lot of options back in the day, but for actual, when I shifted over onto shares, my original, the highest my average on PROG on your watch list in November. Yep, my first actual, when I shifted over from options on PROG into shares, I was at 267. Was my first actual share fill. So that's the highest my average ever was on PROG. Looking at it, I might have been playing options at a higher range, but as far as actual shares, 267 was my highest average, and I kept adding more and more slowly. And I reached a decent share count and backed out and was like, okay, I've got a good share count. Wasn't worried about it, and it was moving around, and November into December into January just kept falling, and we hit those low levels. I'm like, it is perfect time. It was looking like it was starting to catch a little bit of support, and that was when I bought in. It dipped a little bit more for a very short time. I think it was somewhere in here. I'm looking at the I've got it right in front of me. Where was that buy at? $21st? No, okay, next day. I was off by one tick. That right there, on the daily, that is when I jumped back in, when I got the 127. So on that day we had a low of 123. So I wasn't too far off of for that day. I was only 4 cents off of a bottom tick. We closed at 124. We did have a high of 136 that day. So I almost wonder, December 20 or January 21st. So let's kind of go back and actually we'll go in the 5 minute. December 21st or January 21st. Quit saying the wrong month. I'm all kinds of confusing myself. And scrolling. Keep that stock a scrolling. Getting closer. What dates do? Okay, still. We almost there? Yeah, so there's the 21st. So I picked up the 127. Does it actually tell me when I bought it on that date? Filled at 9:13. So is it right here? Okay, that times can't be right, 'cause unless I bought it in pre-market, which I might have actually gone for pre-market on this. But looking at the share prices, I think the clocks are just not synced up on it. So what's everyone else up to today? Hopefully everyone's enjoying this green day. Hopefully everybody's just doing really good, seeing their P&L climb after what we've been seeing going on. In fact, we'll pull up AMC here and just after everything we've seen lately, after seeing all the lines you put on the screen, seeing them just get punched through, obliterated, crushed, smashed. it is nice to see us, breaking the trend. We're on the 1 hour right now. And this is great. Let's widen this out just a bit so I can grab. I want to grab lines so I can get the lines a little bit better. So going off that, yeah, we're definitely breaking through now. If we keep this momentum going, this will just, it'll continue to be glorious on top of glorious. Hey, Ugandan Toad, welcome to the live stream. So yeah, there we are. That's on the 1 hour. Let's go back in. God, it is so nice to see AMC climbing to the point where you really have to adjust your screen in order to fit the entire chart in. Balancing your lows against your highs. But seriously, let's jump in here. Look at the calls. So yeah, looking at it, we got over 10,400 in at 17 for this Friday, and we jump up to 18. 18 is gonna be a real battle. That's almost another 11,500 right there. So between these two, strike prices, we're looking at knocking on the door. What's that? 21,500 contracts just on those two strike prices. So this is momentum we desperately need to carry into Friday. And if we keep this upward momentum going and start really fighting to this 20, over 18,000 contracts going in the money, and those, now see, that could be an important level, because if the hedge funds did not go out and purchase shares to prepare for those to go in the money, that could be a good gamma squeeze coming in. Forcing them to have to go out and buy shares to cover these extra contracts. And to get there, we have to go through another 11,000 contracts that would go in the money. So in essence, if we ran up to here, we'd be knocking on the door of an additional 30,000 contracts needing to be covered. So yeah, this battle for 18, we need to say 18 is not good enough, and we need to battle our way up to 20. If we can be battling for 20 at the end of the week, we're definitely going to be in a much better place. I can almost guarantee not all of these 18,000 contracts have been are covered right now. Those are positions that they are going to have to go out and cover the closer we get. Going into tomorrow, if we start creeping on 20, we could see increased buying pressure just from them, being skeptical if they can hold us and having to go out and cover those positions. So, kind of looking here, it's not much time left in the week for guys. I can try to look and do math, but with it constantly bouncing from in the money, at the money, out of the money, right on this level, it's going to keep shifting them around. It's going to make it hard to go through and actually run through numbers. That's why I like doing a lot of my research at night when the markets close, because the option chain is not moving around. Which means during the day I do miss out on the opportunity to get in on some trades. But it's nice to be able to sit down when the market's not doing anything, look everything over, and really, really start to develop a game plan. And that goes back to, that's one of those day zero things in options trading. You want to go look at your stock, evaluate, come up with your trading plan, know where you're, how much risk you're willing to take, what reward are you looking for. It's easy to say, I'm going to buy calls and wait for the stock to go to the moon. That a lot of times that plays out to you're just throwing money away. Having an actual plan where I'm looking to hold these for be out of them through the first day, and I'm hoping for, if I see 25% profit, I'm going to take 25% profit. You know, having a plan and having contingencies for that plan, you know, those are the traders who make money. It's easy to go out and buy YOLO calls and YOLO your money right out the door. If you purchase a call contract for $25, the current price is $18, do you automatically lose money at the start of the contract? Wait. Okay, current price. Let me jump over to the calls just so I can make sure I see what you're saying on here. So we're going to want singles. Okay, call contract for $25. So you're talking $25 strike price? Because, you know, the way it works is you pick your strike price. So, you know, if you're looking for it to be above 18 or above $20 on Friday, you'd purchase a $20 call, which, you know, I always say make sure you've got enough time. You always want to make sure you have enough time to be right, because if it doesn't run up to that price, then pretty much you are just throwing your money away. Let me see. Do you automatically lose money at the start of the contract? No, see, the money you're playing with is the premium you pay. So let's go out to next week just so we have a little bit more time on it. So say you wanted to, for next week, you wanted to buy a call contract at $25, the $25 strike price. So $26 is the premium you pay per contract. So you buy that contract for $26, and it doesn't immediately lose all that value. You're not doing a one for one. The money you're playing with is the premium that you paid for a 100-day contract. Okay, we'll jump out to 100. So you're looking at the May monthlies. May monthly, $25 strike price. You're paying $240. So the thing that you're dealing with is the money you're playing with. It really doesn't. The strike prices do matter. The share price does matter, but where they matter is in your Greeks. So you're going to put up $240 to enter this contract. So that's the money you're playing with. You're playing with $240, and at the end of the contract or at any time, if this hits $1 or 1 cent to where it's pretty much worthless at that point, and you sell, that's where you're pretty much done at. So right now it's sitting at $241 is the price of the contract. Now, if AMC's share price moves by $1, up or down, if it moves up by $1, your contract is going to gain $41 in value. So basically your 242 right now would turn into 283. So it would gain, based on $1 movement, is the increase in the delta. Now, as you go up that $1, your delta is going to increase by your gamma. So basically your new delta would be your current delta plus your gamma would give you your new delta. So you'd be looking at, mathing here. It would go up to about $44, $45 on your delta at that point. And your gamma, of course, would change. And I think that it would change in regards to your rho. The main Greeks that I pay attention to are the delta, the gamma, and the theta, because those are the key ones. But they all a little bit tie in with each other, but the direct correlations are your delta to your gamma. So as you move up $1, your delta is added to the value of your contract. As you move up the $1, your gamma is added to your delta. And as time decays, the value of your contract every day, if you bought this at noon for $241, by noon tomorrow it would lose basically $2.16 worth of value. So basically tomorrow, same time, if nothing else changed, if the volatility stayed the same, if the share price stayed the same, instead of being $241, it'd be $239. aren't you 7x delta down at the start of the? I've never heard of 7x delta. That's yeah, I've not heard of. Now you could end up losing a lot. You may lose a bunch as soon as you buy it due to volatility. Because if a lot of times if you're getting into options, the share price is going to change, the volatility is going to change, and all of those directly affect the cost of your contract. So, looking at it, making me do more math here. If your share price moves by just a couple cents, it could theoretically move the overall value of the contract. Oh, it moved on. It could move the overall value of the contract by $7. Oh wait, I mean if you buy it 18 a strike. Oh, 18 a strike for 25. Okay, now you're talking about the more recent ones? If you buy at 18 for the strike price. No, see, they the numbers you're playing with, the strike prices only matter as far as the movement of your delta and where you are on expiration. The money you have your target. Okay, so you're buying at 18, and your target is 25. The money you're dealing with is the premium you pay. So it can trade if the volatility kicks up and it moves up maybe say another dollar or so. You could see theoretically a 10-15% gain in the same day. That's how day traders make their money, because a lot of the value you have the value of the strike prices, which only matter at expiration. Most of your value is tied up in volatility and your theta, how much time you have left. Because it could be, you could end up pay $240 for this contract. You don't have to hold it to expiration. This could run up. You could see it run up to $23, see a huge spike. You could end up 2xing, 3xing your money, and it's still the same day, or it's the very next day. And at that point, you could sell and capitalize on all the remaining theta you have. Because remember, every day you hold a contract, you're losing money as a buyer to theta. So yeah, if it runs up, if it runs down, you're going to lose value. If it runs up, you're going to gain value. But the sooner you exit that position, you're cashing out on that on all that theta you have. That theta is like profit in the bank. Does the current price, $18, affect your contract? The price being, the separation in the price, there's a huge algorithm they have that they look at the price they look at your strike price and where the price currently is, and they use those to calculate out your Greeks. So in a direct one-for-one, the prices are separate from each other. The difference in price between them only matters when it comes to calculating out your Greeks. And your Greeks are what you use to calculate what the actual value of the contract is. If that, the fact that they are different as you get closer to expiration, as that theta decay kicks in, then the difference between your strike prices really comes into play, because at that point you need huge moves in order to create enough delta movement to bring your contract back into profit. The closer you get to expiration, because gotta remember, when you're buying a contract, it's the strike price plus the premium you pay. That's your break even. That's one of the key numbers you want. If you're looking to exit sooner, then if you get a faster run up and you've got tons of time left, tons of theta left, that's where you can capture profit. But initially, when you buy your contract, there were people who were YOLO calling, when we were at the $40 strike price, and they were buying YOLO calls for $144 strike price. Well, we never saw that, but if we saw enough of a run up, if it was a $5 run up in like a day or two, they may have, because of how far out they purchased their contracts, they may have had that extra theta. The movement of the prices could have created a whole lot of a delta gamma roll to where they would have been able to capture a lot more profits. So just because you're away from your money, if you give yourself enough time when you're buying contracts, your theta is what gives you time to be right. That's why you always hear about people. It's been mentioned several times about making sure, if you're buying calls, make sure you give yourself enough time to be right. Because it does, you do lose value to theta every day, and you need that stock price to move. You need time to be right. So yes, at the $18 strike price, if you're buying 25s, if you're buying them for this week, you may not have enough time. You may not be able to run up to 25. That's why you would look towards, like you were saying, 100 days out. Well, if you're buying 100 days out for 25, you would just run through. You're going to lose value and gain value as the stock price fluctuates, just regarding your delta. Your delta and your vega just combining for your price action throughout the day. Ooh, excuse me. As you get to your next day, your theta, theta is going to be ticking every minute of the day against you. So it may look like you lose money right off the bat, but there's no magical switch that is thrown to where as soon as you enter a contract, you're automatically losing money. If you're losing money when you open a contract, you notice immediately you're down a couple bucks in your overall value. Not in your share price, but in the value of your contract, in the premium you paid or premium you received. That's just as a result of the share price movement and vega just kicking in just from volatility. I hope that's a decent explanation. But if you've got these contracts for 25 at 100 days out, if you purchased contracts, if in the next week or two we get a run up and we hit that 25, even if you don't hit 25, if you see, let me run through some rough math here. I'm looking at the deltas and the thetas. So I don't remember the exact. I would have to look at the other Greeks to see how theta would change day to day. But say in the next 2 weeks you get a run to 22, even a run to 21, you are going to be your contracts are going to be in the money. You will probably don't quote me exact numbers on the I'm taking a swag at it, a scientific wild Heineken guess. You would probably be up on a movement in 2 weeks up to $22 strike price. You'd probably be looking at a 60 to 80% profit depending upon what happened with volatility. And at that point, you could exit. You could capture your profits, exit, and look for another entry point. That's part of day trading when you do it in one day. Swing trade, a couple days, a week or so, and there's absolutely nothing wrong with watching the prices move and with capturing profits on options. You don't want to do it on shares because there's always a possibility you're selling back to the hedge funds. You'll hear that a lot of places. But if you're playing with options, capture profit when you can. No one has ever lost money capturing profit. Oh, okay, I gotta. let's see that. But yeah, those are some good questions. Very good questions, Toad. And that's the thing, you know, if you that's what the channel's here for. If you don't know, ask, and we can go through and look at everything, and I will try, you know, with the knowledge that I have and in the best way possible to help explain stuff. And of course, definitely, if I am ever wrong on something, and you know, if y'all research and find that, you know, I said something that's wrong, definitely let me know, because if I'm putting out wrong information, I definitely want to correct that as quickly as possible and get the correct information out there. So, you know, we're going off, you know, everything I have learned and everything I have studied. So if I am wrong on something, which I'm fairly certain when it comes to this, that I've never seen a magic, you know, I've never seen stocks automatically lose value, or options automatically lose money when I buy them. In fact, a lot of times I try to time them, you know, through technical analysis. I look at it and a lot of times I time the tick the correct way to where they gain value almost right away. Can you read my previous question, please? Are you asking, doesn't the current price affect 18 affect the contract? Is that the question, Toad? See, the current, I assume you're talking about the one where you say, doesn't the current price affect the contract? Think of it as wherever you purchase your option contract at, whatever strike price you purchase it at, that is the baseline. The previous statement about the current price affecting your contract. But one way to think of it as wherever you purchase your contract at, that is your baseline that all movement is measured off of. You know, that's the entry point of where your premium was initially paid. But as it moves, you know, as you move further, either further or closer to your strike price, that it, you know, that's just a representation of which way your delta and gamma are going to move. You know, do you gain value as you move closer, or do you lose value as you move further away? Wherever you buy at, you know, you don't have to buy at 18, or, you know, wherever you buy at, all that does is it's a culmination of the current share price and all of the Greeks combined gives you the value of the premium, whether you're buying calls or selling covered calls. It's just kind of the starting point of the calculations on your contract, because it's a do you make money if the current price is 18, you buy a strike of 25, but the share price only hits 24. If you hold it to expiration and you buy at 25 and it only goes to 24 at expiration, your contract is worthless. In order for your contract to expire with value, it has to go over $25 a share. If it hits 24 before expiration, and the value of your contract is higher than the premium that you paid. So with the example here, we were talking about, whoa, has it gone up? Oh, no. So you paid $239. As you get closer, the premium you pay is going to change. That's the amount you paid. So it's always going to give you your calculation, your plus minus, your profit loss off of the premium you paid compared to what the premium is right now. Because if you're going to exit ahead of time, as buying a call, you'd be selling this back. So in order to make money, you would have to sell at a higher price than you paid. But if you let it run to expiration, it's going to continue getting closer and closer to zero until it goes until expiration, and you need it to be above 25. So if it's still below 25 at expiration, you've lost. You've pretty much lose all your money on it. Say there's 50 days left, the price is 24. Could you have made a profit? If you're halfway through, now the way theta works, the closer you get to expiration, the more theta increases. But if you're 50 days left to expiration and you're $1 away from your strike price, you are in the profit. I cannot. If you purchased at 18 and it ran to 24 and you have 50 days left, that would be a definite. That would be something in a trading plan that, if I saw that kick in, and knowing me, I probably would have sold long before that, because I have no problem with taking, securing profit and looking for a new position. But if you hold that and you're 50 days out and you're at $24, $24 is the current share price, you have a lot of profit on your premium, and selling that back, you would definitely be making money on that. Because remember, the time you have left on your contract, the time you have left is your money. Hey, Wrestler! Oh my God, haven't seen you in here in a while. We have an official live stream. We have an eggplant on the screen. Green on Prog, definitely, Wrestler. I am all kinds of happy. I am not sure where exactly. I'm probably 20-25% up on Prog right now, because I did average down. We went over that earlier. Hey, no problem, Toad. That is why we are here. But yeah, if you're 50 days out and you're $1 away from strike, if you've moved up $6 worth of price movement towards your strike, yeah, you're definitely, you'd be making bank on that. That'd be a glorious trade right there. That's one that I'd be all kinds of happy capturing profit on. Yeah, Wrestler, I am just over 20% up on my Prog right now. I'm so glad I averaged down. I was actually debating starting some swings on it, but I'm not sure. Not sure we're done with the upward movement on Prog for this week. I think we'll recapture maybe into the high 230s, low 240s, maybe by the end of the week. It is possible. It looks like we are going through a little bit of a pullback here. We did hit 206.5 on Prog, so that is those glorious share counts. But I was debating maybe doing a little bit of swinging. I might swing a quarter of my position or half my position on Prog, just to see if we do get a pullback. If we pull back into the 160, 170 range, it definitely would be a chance to either increase my share count or just buy back in for the same share count but bank the profits. Just something I got to look at on Prog, but I think we may still see a good volatility spike tomorrow. That first 15-30 minutes of the market, those can tend to be the most volatile times of the day. So it might see all the aftermarket hours from people on brokerages that don't have early trading. People may get their orders in, but they're not executed till market order. So you could see some huge spikes. And if there's a huge spike and it gets severely overbought, and it looks like get a good MACD crossover, like it's going to take a nosedive. Yeah, I would look maybe to swinging some of my shares there. But yeah, Prog looking glorious. I was even thinking about on Prog, I was looking at I was looking at covered calls. I was looking to see about making a little bit extra. Let's go to next week. Just kind of having a peek at what we got here. Are there any call options for $100 with AMC with a fairly short expiration? See, the I can go over, have a look at that, Toad. But see, when you're talking short expiration date or short expiration, the thing is, like I said, the closer you are to expiration, the more ramped up your theta is, the faster you lose value to time. Okay, yeah, we still got plenty to. So I'll go ahead and open it up. I will pull all strikes. So right now, for this week, 60 is the highest. 85 strike for next week. And those are the February monthlies. So monthlies will have more interest on those. Some people just like to play the monthlies. As an option trader who primarily sells positions, I like playing every week because that's recurring income. Yeah, see, you go back out to the weekly, the 25th of February, those are weeklies. Those are weeklies, not warrants. I heard someone in a live stream on Clay Bros. They thought the W meant that those were warrant contracts, and they didn't realize, Clay didn't realize what they were asking, but I knew right away that the W they saw was for weeklies. So yeah, all the weeklies look like they're going to be, they don't go as high. 36 strikes on the March weeklies. March monthlies, you're getting up to $95 strike prices. Now, the thing is, March is still pretty far out. If you look at these, now see, you're not going to gain a lot on delta just because of how far away you are. Your gain per dollar movement's not going to be as high, and your gamma rolling into your delta, again, not as high, just because how far away you are from the strike price. The closer you get to your current share price to the strike price you're going for, the more the numbers increase. So you can get some YOLOs pretty far out. These are, you're paying $17 a contract. You are losing $1 in value per day, though. So yeah, you are losing value on these, but as you get closer to closer to the strike price, if it started to run, these would print. And as you can see, a lot of people are buying these just because they're cheap. Now, unless you're looking for a fast run up, which it's not economical to do it this way. But there are a lot of people like, oh, the run-up's coming. Let me go out and buy as many contracts, as many cheap contracts as I can further out. That's why there are almost 50,000 contracts there. And a lot of these people are going to hold to expiration, and they're going to turn into dollar value. They're going to be worthless, and they're not going to be able to offload them. So a lot of these, yeah, if it runs up and you hit it right on the nail, and it happens to spike right after you get these, yeah, you're gonna get paid out huge. But if there's no run-up, if we continue trading in channels or trade on a nice smooth ascending support line, these are going to be worthless. People think AMC will MOAS soon. That's why I want to see the highest price. Yeah, if it MOASes, these are gonna print. These are going to be huge. If the thing is, if the MOAS starts on March 22nd, March 23rd, the week after, these expired worthless and the MOAS still happened anyway. Watched a video which said, as a general rule of thumb, the delta value is the percentage success of the contract ending in the money. I have not heard that. Now, wait a minute. There is... Hang on. I got to check something real quick. Because as I said, I like to get the most accurate information I can get out to the community. So let me check and verify this first. And I kind of want to... So we're on the March 18th, and we want highest. We want the call side of the house. I'm trying to see if there's any actual number. If the delta is 0.6, well, see, essentially, so if you buy yourself some calls and it has a 0.6 delta, well, if the share price moves up by 50 cents, the contract's going to gain 30% of value. If the share price moves up 10 cents, you're still going to pick up overall $6 worth of value. So the delta is just representative of a dollar movement, how much your contract gains in value. Yeah, that video, that's pretty much any option contract you have. If within the first short period, depending upon theta versus how long you got the contract for, if there's any kind of decent movement in the stock, like 50-cent movement or whatnot, the contract's going to increase in value. So any stock that moves up by 50 cents in one day is going to be in the profit, because your profit comes from your share price movement versus your delta tells you how much you're going to make based on that. If you have a link to that video, if you wanted to tag me in Twitter on it, and I can have a look at that video and check the information and just kind of see what they're saying and see how they're explaining it. But this is the first time I've heard of people using the delta to calculate percentage of profit. So I don't know. I would kind of want to see their video and see where the information. Where they're going for it, or what they use. Are they algorithmic trading, or what exactly is going on? Oh, AMC calls. Oh, hey. Were we over, anyone remember, were we over 18,000 at 20? I could have sworn this was a lower number. I'm wondering if, last time we looked, I wonder if a bunch of people are jumping in, buying those 20s, thinking that this run's going to continue through the weekend, through the week, which I'm wondering, we might be battling for 20 at the end of the week. There might be some people really wanting to jump in and make some money by the end of the week. I would rather, I'm not a fan of buying options. I rather sell because, hey, Riptide, how's it going, man? I like selling because I like time to work for me. So a dollar move 36, lose 7, lose almost 8 per day. Dollar movement that would translate into 26. 26 at 1925. Maybe. Hey, no problem, Toe. It's just like I said, it's something I hadn't heard before. Got some $2 calls on PROG. Hey, Riptide, I hope those pan out for you. Hope those go good. I was actually looking at, for next week, I was looking at the value on PROG on selling some covered calls. Because, if it hit $2, essentially I'd be getting $2.17 per share if I had covered calls and it closed right at 2 and those were exercised on. But if it, at $17 per contract for next week, but if it stays below $2 the way it's been doing, I could could make some nice premium right there. Only a general rule of thumb. Yeah, but like I said, all you gotta do, know your Greeks and calculate out, and that's part of building your trading plan is knowing how much you're looking to capture for profits. Are you looking for 10%? Which is a decent amount, but do you want to go for 20% and beat the market average? Beat the S&P 500. Do you want to go for 25, 30? What level of profit are you looking at, and how long do you want to hold? It always comes down to time versus profit, because as a buyer, your profit is going to dissolve with time. But if your share price is moving faster than your time decay, that's another way to make money on it. But everybody, we are getting to that time. I'm still learning options thing, just starting this week. Yeah, Riptide, if we do see a run-up, depending upon when the expiration date on your prog calls are, if it runs up, do not be afraid to capture profits. I've said it before on the channel. This is the financial advice I give on this channel. No one has ever lost money taking profits. Saw that 100% utilization. Yeah, a lot of people seeing that going on right now. Brad Finn channel, learning options, Greeks for beginners. At 6 minutes, he writes on a whiteboard. Okay, yeah, I'll go check that out, definitely. But I want to thank everyone for stopping by. I've got to get back to my regular, I got to get back to my 8 to 5 job. So Toad, Paul, Riptide, Cassie, Wrestler, thank all of y'all for stopping by, spending a little bit of your day here. Hopefully I imparted some knowledge, and if I didn't get you the exact answers or full enough answers, hopefully it at least gives you a good direction to look on, to look towards, getting the full answer. But I love doing this every day. I love spending time, love passing on chronology to everyone. So I am going to wrap this up, and I want to wish everyone good health and good trades. And I will catch y'all over on Clay Bros in just a little bit. Have a wonderful day.